back to the ETF Inspector. It's Saturday, July 12th, and in this video we will be reviewing the YieldMax individual income covered call strategy funds. There's 7 of them that we cover listed in the thumbnail, and we will be going over the week in review from the past week, as well as looking at the week ahead to see how they're set up, and also make a distribution guesstimate for FBY because they are the only Group B fund that we cover on this channel. Before we get into the data, just a reminder, I'm on X as well at ETF_Inspector1, and I let you know when videos are coming out and repost things from YieldMax and Roundhill. Also, just want to let everybody know, just in case you're also into any other things, I have ALTI and LFGY series of videos that I make daily, and now I'm making Roundhill 0 DTE fund videos, QDTE, XDTE, and RDTE. All right, let's get into our information. We'll start with GOOY. Since they were Group A last week, we made this video and made a guesstimate, and boy, were we way off. So they made $1.25, almost 26 in income. The IV said that they were going to pay us around 33 to 34 cents. I guessed 65 because I knew they weren't going to go anywhere near the 125. I can't remember what Retire on Dividends guessed, maybe like 40 or something like that. But they paid us 30 cents, 30.77. Now I say us, this isn't one of the funds I own. I do have a handful of them, but not this one. So that one was a surprise to the downside, but you have to keep in mind on months where they were losing money, they were still paying you as well. So it might just be going along with something like that. Maybe they're finally getting back to breaking even, but we don't know. Either way, either they give you the 30 cents per share and the shared price drops by 30 cents, or whatever they keep, it stays in your share price and your value stays up. So again, if you're depending on this for a steady income, then you want that distribution to be nice and high. But if you're just reinvesting anyway, then either way the money stayed in the fund. But all right, so since we're on this one, we'll go ahead and finish with this one, then we'll move to the Group B since we have a distribution guesstimate to come up with. So they declared on the 9th, we just said it ended up being a 33.11% annualized yield. Next declaration is 25 days from now on August 6th. Google finished at $1.80 on close of Friday, and GOOY at $12.08. That's only 1 cent off from the NAV. Since our last week video, there have been an increase of 50,000 shares, bringing us just under 11 million outstanding shares. There's 132 million managed in the fund. The synthetic is brand new, so that's why it's only worth about 10 cents a share, because when you sell a call and buy a put both at the same price, a lot of times they're going to pick a price around at the money, so they kind of even out. So it's worth $1 million right now, but it's out till 9/19, September 19th, and it's a 180 with the stock at 180 and 19 cents. Not looking great going into this week. So if you're not familiar with this, right, we have I should color code these. I've been asked to do that. Just try not to have too many colors and then the whole screen's just a rainbow. But the synthetic positions up here, so we've got 7,495 contracts puts at 180 and exactly the same calls at 180. So that will mimic having the stock. It'll go up or down in value as the share price goes up and down. Large majority of the money is held in treasuries, and then trying to make income by selling calls off of those synthetics. That's the way this works. They have everything, all their eggs in one basket at a 180 call strike price, so it's already 19 cents in the money, or 0.11%. So we actually need Google to stay flat and drop a little bit throughout the entire week in order to be able to make the maximum profit off of these calls. If we take a look at the trades throughout the week for GOOY, as you can see, we just started a new 4-week cycle. That's why we got a payment last week. So Monday was the first new trading day. We had trades on Wednesday and Thursday. On Wednesday, what did we do? Closed out the synthetic and had to start a new one, right? So there's our 718-180, buying the puts to close them out, selling the calls, and then selling puts and buying calls for 919. As you can see, basically costing about the same. It actually cost more to close it out, so we lost money overall on that transaction. So $631,000 total. So that was closing the synthetic, opening the new synthetic going forward, closing out the portion of the trades, and selling new at the 180 strike. And then on Thursday, they closed out the rest of those calls that they started closing on Wednesday. On Thursday, they closed the rest of them as a win, right? Paying 5 cents and collecting $1.08 on the new roll to the following week. So $303,000 profit. So far in the new cycle, we're down about 330. All right, next we'll go to FBY. I usually like to cover the trades first, but for some reason I'm feeling a little different. Nah, let's do it. That's how we come up with that information. All right, so new trades to talk about on Monday and then Friday. So on Monday, FBY closed out their synthetic position in Meta, and that was a nice one, right? Collecting $16 million, selling the calls, and buying the puts for $257,000. So real nice. We started our new position. We went from a 660 synthetic position to a 725, also September 19th. So we got ourselves 2 months roughly. But as you can see, starting a new one almost breaks even. So on the day, it was a almost $15 million win. So we've been waiting for that to get closed out. And then on Friday, they were closing out options that were expiring on the 11th. That's where you see all these buy to close, 11-11, paying 4 cents to close them out, 5 cents, 4 cents, 8 cents. So it was a win for the week on Meta. They did well. And then selling the new calls, 730 strike price, 730, 730, 732.50, collecting in the $5 range. So profiting almost $1 million on the closeout and rolling of options, $934,000. So then we go ahead and take a look back at the 4-week cycle, and it comes to a $15,145,000 profit on the trading cycle. So when we're coming up with our guesstimate, right, we take that 15 million and change, we divide it by the outstanding shares. Now that increased this past week by 250,000 up to 10,775,000, and we take what they made, divide it out by how many shares there are. So that would be if they handed out every penny. I actually ought to start multiplying that by 0.9 because I think they promised 90% of what they make. But in any case, we're just coming up with a couple numbers before our guesstimate. So they made $1.40 per share total in the 4-week cycle. Based on the IV, where they promise us to try to pay the IV of the underlying as the yield, that will come out to 47.8 cents. So we're thinking it's going to fall somewhere in the middle. I think they're going to give us more than 47 cents a share since they made $1.40. I take into account recent payments. So 53, 63, 52, 55. Got to go back a little ways, but they did pay some higher. 83, 92, 79, 89, $1.17. So my guess, and take it for what it's worth, this is a free video, I said 75 cents. I would not be shocked if it was lower, and I wouldn't be shocked if it was higher. I guess I'd be more shocked if it was higher, though. I wouldn't be surprised if it's lower. but I think we're going to see higher than the last one for sure. But time will tell. On Wednesday, that'll get declared, 7/16. All right, Meta closed at 717.51. Phoebe at 1681. There's 180 million managed in the fund, and as you can see, it's a brand new synthetic, like we talked about on the trading page. So it's worth 457,000. It's basically sitting real close. It's a 725 strike on September 17th. As always, in these individual funds, most of the money is sitting in treasuries and then selling calls to generate income for our payouts. We've got two strike prices. Calls sold at 730 and 732.50, almost two times as many at the closer strike. That's 1.74% out of the money. The other is 2.09. So we would like Meta to trade up to, but not beyond 730 this week. So there's about $12.50 of upside before we are capped. That capped meaning once it goes past that, now it's going to cost us money to close them out. All right. They're part of Group B. I think that's just about everything for them. Now let's go ahead and start at the beginning and just move left to right from here. We'll go a little quicker because we don't have any distributions we need to talk about. So AMDY had trades on Thursday and Friday. Closing out some options as a loss on Thursday and rolling them up and out to the following week. $1.5 million loss on the day. And then Friday, same thing, closing out more of them. Not as bad of a loss, almost a break even. Basically, if it wasn't for having to buy your protection, they would have been within 21 cents of each other. But $300,000 loss on that one. So a full trading loss on the week, $1.8 million. And that would be because AMDY or AMD, Advanced Micro Devices, went up beyond our sold calls, but that means that's going to increase the value of our synthetic. The synthetic expires this coming week, so this will get closed out this week. Right, do I have my dates right? Today's the 13th. Yeah, so it expires this Friday, so it's going to have to get closed out this coming Friday. It is worth $43 million, so this will be a nice one way or another, and that comes out to a current value of $2.10 per share. So we've been looking forward to this getting closed out, and the following week they'll declare their distribution, and we're guessing it's going to be a nice one because we're making a lot of money one way or another. Unless AMD, well, even if AMD, if AMD crashed, that would hurt. Because that's a 110 synthetic, and the underlying's at 146. There's 20.6 million outstanding shares, 171 million managed in the fund, and the call strike price, all their eggs in one basket, 150 for this coming Friday. 1,100, almost 1,200 contracts. That's almost 2.5% out of the money. So 150, it's about a little over $3.50 up. So we could go up $3.50. Would be best case scenario. It would increase the value of our synthetic without exceeding the sold call. So that's always the goal. Okay. That's it for them. AMZY had trades on Thursday and Friday. Here's another one we've been waiting on. They closed out their synthetic. We love it. Collecting $48 million. We opened a new synthetic, and they got a little expensive with it since they had extra money to spend. So they went almost $5 or $6 million extra dollars on the buy side to put us in a good position, or hopefully profiting $43 million overall on Thursday's trading day, and then Friday closing out the weekly calls and rolling them to the following week. Paying $1.39, selling for $1.62. It's okay, not the best, but all in all, end up profiting well. So 225 was the expensive ones to close out. The 232.50s where are we at? 227.50s were winners. They only cost 7 cents. So that's really where we made our money on the second half of the contracts that didn't get exceeded, getting to sell them for $1.40 after paying 7 cents to close out the previous weeks. So $688,000 profit. Very nice trading week for AMZY. AMZY is part of Group D. They won't declare for another 18 days, but when we do, we already know they just locked in a nice big win. So it should be a good payment when we talk about it for July 30th. Amazon closed at 225 roughly. AMZY at 1614 with the NAV 3 cents off. Not bad. 175,000 new shares this week, bringing it up to 18,175,000. 292, almost 293 million managed in the fund. The new synthetic's not really worth anything. I mean, I was looking at the wrong thing. It's worth $8 or $9 million, but we knew that off the bat. They didn't buy it at a basically a break-even price. They bought it already in our favor. So that's 49 cents a share, but it's out until September 19th at 220. Currently $5 to the good for us. Most of the money in treasuries, 30 for this coming Friday. They're 2.2% of the money, so we can afford for Amazon to go up almost $5, but nothing more. That's what we're hoping for this week, so we can win those trades. Because just in case you're not familiar, right, when you sell a call, you start out just selling a call. You're going to have to buy it back at the end to close it. So you sell it, you collect the premium, you hope that it ends up being worthless, right? So if the stock ends below 230, why would anybody want to buy your shares for 230? So they don't, and that's why it's worthless. No one wants to pay anything for something that's not worth anything, so we get to close it out nice and cheap. That's the goal in all these. Okay, APLY for Apple. Only traded on Friday. That's usually a good sign, and it was for this one, right? So they didn't have to touch their calls all week, and then they closed them out on Friday, paying 2 cents to close out their 215s, 6 cents for some other 215s, and 6 cents for some 212.50s, collecting $1.15, $1.38, and $1.22, selling 215s for next week. Very nice, $600,000 profit for the trading week. APLY is also part of Group D. They declare in 18 days. I haven't been mentioning it each time, but these 30-day IVs have been updated. I just updated all of them today. So they play into when we make our guesstimate. So it really doesn't matter if we're not making a guesstimate for the fund this week, if we talk about it that much, because it will change again before we make our guesstimate. Apple at 211, the synthetic is for August 15th, 200, so it's already in our favor, about $7.7 million, or that comes out to 73 cents a share. There was an increase this week of 50,000 shares, bringing it up a little over 10.5 million outstanding shares, 137 million managed in the fund. What else do you want to know? Calls for this coming week are all sold at 215. Then when they buy calls further out, that's just protection in case the stock just keeps on running. It kind of creates a limit to how much you could have to spend to close it out. So they've got it protected for the most part at 220, and then a little bit more shares beyond that at 222.50. So worst case scenario, we could lose $5 per share on these contracts and $7.50 per share on the remaining 2,000. Those 215s are at 1.82% out of the money, so we could afford. We're rooting for Apple to go up to, but not passing 215 on the trading week, so we increase our synthetic the most without having to pay to close the covered calls. We talked about FBY and GOOY. On to MSFO for Microsoft. All right, trades on, what would that be, Wednesday and Friday. So on Wednesday, stock was up too much. They had to pay to close it out, $7.16 and $7.26 a share, only rolling them out and up, collecting $1.80 and $2.50. Overall loss of $354,000. But that was the smaller portion of the shares. The rest of them, they left them go, hoping it would come back down, and it didn't. So then they had to pay, well, $4.73 and $4 to close those out. So I don't know if the stock actually went down or if just some time value decayed away. Maybe a little combination of both. So closed out the remaining shares, opened new ones, having to roll up and out again. That never ends up working out too well in your favor. $478,000 loss on the trading week. But before you get worried on all these losses on trading, the only way we lose on trading is if the value of the underlying stock goes up. And if it does, then that takes the value of your synthetic up. So it's still okay. MSFO is part of Group C, previously declared on the 25th. Next declaration is 11 days away on the 23rd, so that's not this coming week, but the next week. Microsoft at 503, MSFO at 1794. 2 cents off, actually a 2-cent discount from the NAV. 7.2 million outstanding shares, 120 million managed in the fund. The synthetic is for $4.35, and it expires this coming Friday, so it will get closed out this week, and it's worth over $17 million, or $2, almost $2.50 per share. So we're going to lock in a nice win this week when we roll our synthetic to the following, to the new date and strike. They're a little more spread out on these sold calls. Right, we're at 507.50, 510, and 512.50. 500 contracts, 1,600 contracts, and 500 contracts. They're 0.8, 1.3, and 1.8% out of the money. So best case scenario for us would be Microsoft to go up, but not past 507.50 for us to have the biggest increase in value without causing us to have to pay to close out the covered calls. And finally, last one out of the 7 that we cover, NFLY for Netflix. They had trades on Tuesday, Wednesday, and Thursday. On Tuesday, this looked like, I'm not sure why they just closed. This must have been like a forced closure, people selling out or something of the fund, so they just had to close out a portion of the calls that were sold. So that was a $13,000 loss. That doesn't look like a strategic move. That looks like their hand was forced. On Wednesday, they rolled their synthetic. So closed out the old one, collecting almost a total of $19 million there. Opened the new one, spending about $1.5 million opening the new one. And then, I don't know, rolling 13 options is weird. Closed out some 1,337.50. That's a weird strike price. 1337.50s and 1332.50s for 30 is and 40 cents, and selling some 1375s for the following week. $15 and $14. Overall profit of $18.2 million. So that closing out the synthetic when it's doing well always helps, right? It makes up for and makes sense of lots of trading losses throughout the time period, because if the stock just kept running up and up and up, it's going to make you lose, as you see, trades week after week on your covered calls. But as you see, that didn't come anywhere near the 18 million that you made because of it going up so much. So it's okay to lose trades because you're making money in a different way. Then on, Thursday, they finished off rolling everything else. Buying for 35 cents, 37 cents, and then making lots of sales. So it seems like they didn't actually sell everything that they bought to close the day before. Got all their sales in the next day, totaled up to $1 million profit. All right, NFLY is part of Group C as well. And it actually, they had a rough week, down week, I think. they were kind of on a roll. Obviously, if they had calls in the 1300s and then they closed in the 1200s. So they closed at 1245.11, NFLY at 1805, dead on with what it's worth. The NAV, 75,000 more shares added this week, bringing it to 9.1 million, 165 million outstanding. This is one of the ones I own. I own NFLY, AMZY, and APLY out of these 7, just for disclosure. They're new synthetic. This is the one that just got created, so we're not worried too much about it if it's up or down, because we got 2 months on it. 1280 with the stock closing at 1245. It's actually in the negative $3 million right now. All their strikes, right? They rolled these on Thursday, and then NFLY took a beating on Friday, which resulted in, we're going into this upcoming week 8.8 to 11% out of the money. Now the interesting thing on this is the first time I've seen this. They didn't buy any calls to complete these spreads, so we do not have credit call spreads here like the rest of them. We just have sold calls, but it's looking like, I mean, we should be able to win all these trades, almost 9 to 11% out of the money. So we can afford a big week. 12.45, it can run all the way up to 13.55 before we even start losing the first option strategy there. Big part of this might be because this week they'll be declaring, they're having their earnings, Netflix itself. So I don't know if something came out or what ahead of time causing it to go down. But either way, extra volatility on earnings week for sure. But we can afford a over $100 increase this week. So we want lots of green days on Netflix. Okay, that is all I've got for you. So we've got, just kind of do a real quick recap. We are looking for a better than usual distribution announcement on which one? FBY this week, but we were expecting one on GOOY last week and we didn't get it. So we shall see. Other than that, appreciate you watching the video. I got a dad joke of the day for you. You earned it after listening to me talk for the last, I'm up to 27, 28 minutes. So thanks for watching. I appreciate all the likes and comments and shares. I try to get back to everything. So if I missed one, it's definitely not on purpose. But okay, dad joke of the day. Look, not to brag, but I have a pretty cool talent where I can tell you what's inside a wrapped present without opening. It's a gift. I know, it's stupid. Okay, enjoy the rest of your weekend. Good luck trading this upcoming week. And if you are into any other things, like I said, got a couple other videos that came out. We had our Friday videos for how trades went, ULTI, LFGY, and the Roundhill funds. There's a guesstimate similar, just like this video, for the other YieldMax, ULTI, and LFGY coming up Sunday. And then I will also be making a my trades video like I do. Where's the most recent one? Tuesday, Wednesday, week. Look ahead. There was my last one, right? So I'll make another one this week. Let you know how I made out all my trades and my dividends. Okay, that's all I've got for you, and have a good one.